Cisco has just published its earnings for fiscal quarter Q4, and the stock is up over 5% in the after-hours trading. Let's look at their results to better understand the reason for the price move. Company reported revenues of $13.64 billion, which represents a 10% drop year-over-year and a 7% increase sequentially quarter-over-quarter. However, a 14% growth in the product segment and the fact that they've delivered revenue above their guidance and above the midpoint of analyst estimates is certainly a first key to the price move. The second element comes in the form of gross margin, which has landed at 64.4% on the GAAP basis. However, their full-year gross margin jumped to 67.5%, the highest value in over 2 decades. When it comes to operating margin, we can see a significant drop year-over-year of almost 10 percentage points. However, recent acquisition of Splunk and the difficulties of integrating such a large business into Cisco may have well contributed to the decline, and it seems have been largely ignored by investors. Quick look at the analyst sentiment shows that Cisco has beaten both revenue and EPS estimates and has issued guidance in line or even slightly above the analyst expectations. I'll guess that the recommendations will be adjusted as a result of these earnings, and who knows, maybe the $54 price target analyst quote is within reach. Now let's quickly look at how Cisco stacks up with some of its competitors, namely Arista, Juniper Networks, and HPE. We may argue whether this is a perfect comparison group, but considering the complexity of Cisco, especially after Splunk acquisition, this would have to do. As we can see, Cisco is a much larger business, yet it posted better year-over-year results than Juniper, though the latter sales are likely suffering from imminent acquisition by HPE. Arista's continue its double-digit march, though admittedly from 10 times smaller base. When it comes to gross margin, Cisco shows best-in-class results and going neck and neck with Arista, followed by Juniper and HPE being a distant fourth horse in this race. However, on the operating margin front, Cisco still shows that it's large corporate and shows values way below nimble results of Arista. Of course, some of this downturn is likely to be short-term, plus there are rumors in the market that Cisco intends to initiate a fresh round of redundancies with around 4,000 employees impacted as a result. Before we wrap up, let's quickly look at some additional metrics. As you can see, Cisco's PE is way below Arista's, suggesting a possible room for growth, though it can also be viewed as relatively high if compared to HPE's. Stock performance over the past year and year to date has been disappointing, though if the after-hours jump holds, the company will be in a much better position. We should not pay much attention to Juniper stock appreciation, as it is predominantly driven by the January's jump on the news of acquisition by HPE. However, Arista's stock nearly doubling over the last year should certainly be keeping Cisco folks up at night. Do you think Cisco stock will change its 12-month trajectory now and return to growth? Let me know your thoughts in the comments. With that, thank you for watching, and I'll see you in the next one.